Good morning, it's Mike here. I thought I'd put together an early video. Um, Apologies for the roosters. It is Monday, the 6th of January 2020. And yesterday I did a video on how I assess risk. Now, the videos, I'm trying to not have them too long because I'm conscious you may not want to be listening for 20, 30 minutes. So I'm doing a part two. So yesterday what I talked about is I looked to see where is price heading and which Bollinger Band, whether it's the top or the bottom, has been spiked and is it aiming for the opposite side. So we were talking about GBP, JPY, GBP, JPY. So we're talking about it spiked here, then it spiked at the top, and where's it going to go at the bottom? We're looking at the weekly chart, and I'd mentioned that it closed below the 8, so I was expecting it to head down to either the trend line or the 50. Now there's more I do look at, and I wanted to have a part 2 just to emphasize that. Other things that I do is I always scan out, and when I scan out I look to see what price is doing that way. So you can see here the peaks. This peak is actually a little bit lower, but these peaks are then become higher. So look to see what the peaks are doing, and that forms trend lines as well. So you can see the peaks here began to get higher, higher, higher. Then the peaks became lower, then started going sideways, then dropped down. So the peak down here, it dropped down to over this side, which was 2016. So obviously, Great British Pound had been dropping because of the Brexit, so it had started coming down even further. Then I would have been looking to see where the strong support was, which is the strong support last year was near where the lower low was in 2016. So now what you can see is prices come all the way back up, and you've got higher highs, but not higher than it was on this candle here. So it's kind of peaked there, then started to come back down again. So that's what I'm also looking for. I do scan out. I look to see the peaks and either higher high peaks or lower low peaks. So on a daily chart, you can see the peaks. So I'll just draw a cross line on it. You can see the peaks are going down. So it's like a downward trend. But then you've had the peaks this side getting higher. So you're looking at the peak of a wave. So this is a wave. You can see a wave. And that wave, it's become higher, and it's almost there. So the next progression, so this is why it came down. It wasn't just hitting the 100. It's because it reached this wave here, the peak of this wave here. It came down, but it did not want to go any lower than this lower peak of the wave. So if the downward trend was continuing, you would have seen that on this wave here, this lower low didn't go any lower than that. So that's another trend line forming. So I look for that. Then I start seeing if that's going to continue. So you can see here, it started going sideways. So there was no kind of wave. So on a daily chart, you would have maybe been able to get some trades in here because it was a very obvious, I'll change the color of it. I'll make this, what color should I give it? I'll make it like purple. Well, that doesn't stand out. I'll make it blue. So if you see here, So it's always important to scan out. Don't always be up close like that all the time. Scan out. Look to see what's going on. So what you see there, there's a very obvious sideways movement, and I'll put that blue as well, not to confuse things. I'll make that blue as well. So now you can see, if I scan in, price has been trading in between these trend lines. How many pips is that? It's over 100 pips, just going up and down sideways. Now this is on the daily chart, and I like the daily chart. And the reason why I like the daily chart, you know I like to start with a monthly than a weekly. But the first thing in the morning, what I do is I check the daily chart to see, has there been a lower low? Or has there been a higher high? So you can see here on the left, that was kind of the dojo. It was a higher high. It carried on as a dojo, then it came down, and it just hit the 8, went back up again. So that was then a higher high. So this next candle, yet again a higher high. But the candle that closed to the right of it, there was no higher high. It tested going down further. That could be a signal that price is getting exhausted as well. If it's testing, but it doesn't go any lower, so the spike of the shadow was lower. But then it was rejected, and you can see it closed round about the same as this left candle. So I'm keeping an eye on what are the candles doing. Are the higher highs? What are the shadows telling you? This shadow was higher, then it was rejected. But then it became a higher high. Then it just jumped up. You can see this. That there, as I mentioned yesterday, I would be getting so excited about that candle. I would be placing a short in immediately. I'd be so excited. And as you can see, naturally, from that candle way outside, jumped up way outside the Bollinger Band, you would have earned yourself over 400 pips there. No problem whatsoever. So here, there's no lower low. The 50s become a strong support. And on the daily price, there's no lower low. There's a dojo. So I'll be watching to see what happens. We've got a higher high. So with the higher high, you would assume it's going to try to go higher again, which it did. Then it decided to go sideways a bit. And then it attempted another higher high. But then this candle, there was no higher high here. So because that closed lower than the previous day, that would suggest that you're going to see price going lower again. It didn't just close lower, it closed below the 8. These are all assessing the risk. What am I getting into? What is price doing? Where is price heading? And yes, every day can be different. So if I'm not sure, like this candle here, I would not trade it. This one here, I probably wouldn't trade it. I'll be wanting to see, will that go higher high and aim for the Bollinger Band again? So I wouldn't have traded that day on that particular currency. But then on this one here, it closed below the 8. It was lower, a lower close than the previous day. I would have been probably happy and comfortable trading that, knowing it was going to come down, and it did. So it came down and another 128 pips. Now it's closed below the 50, and I mentioned yesterday that because it's closed below the 50, I'm expecting it to come down either this trend line or maybe even to the next moving average. Now, isn't it funny? The morning has only just started. It's only a couple hours. We already have a lower low. Can you see that? So the likelihood is, because we already have a lower low, the likelihood is by the end of the day, it should continue down to about here. I said yesterday that it may have went higher. Let's look at the 4-hour chart. It didn't. It didn't go any higher. It went straight lower. So now we've got a lower low. There's possibly a good chance it's heading towards a strong trend line. So on the daily chart or the weekly chart, I said it would be heading maybe to the 50 on the weekly, or it'll be heading to this trend line here. We'll keep an eye on that. Let's just see if that happens. But that's another assessment of risk I do. So just to recap on that, I scan out, I look at the waves, and are the waves getting higher? And are they getting higher where it's creating a trend? And generally it does create some kind of trend, or it might go sideways, but then it creates another trend. Then the other trend is the two blue lines that you can see. You would have had trades going up and down here. It just seemed to be stopping in between these two lines. Then it broke through that blue trend line, then started going higher. So I'll be looking for the higher highs of the waves. Then I'm looking for the higher highs of the candles, or I'm looking for the lower lows of the waves. Now it may be on this chart here, on the daily chart, we're looking for it to become lower than here. So we've already got the trend line there. So is price going to rebound off this trend line, or is going to rebound off this trend line? Now if it rebounds off that one, go to the weekly. Where's it on the weekly? On the weekly, it is right on the 50. So if it's right on the 50, then we're looking at, is it going to break through the 50? But as you can see, just heading down to that trend line, you've got a trade. You've got a short trade, and it is 50 pips. Actually, it's more because it opened here, so it's like 100 pips again. So they're all just small pips while you're keeping an eye on where the lower low is, or if it's an upward trend, the higher high is. So I'll just finish off on the 4-hour chart. We all know that we keep a track on where is price. Is it above, like here, the 8 moving average, or is it below the 8 moving average? And yet again, where's price going to stop? Here it stopped on the 50. Then it went back up again. So it went through the Bollinger Band. It was above the 8. We know that's a signal it's going to come down. It went through the 8, closed on the 50. Then it went back up again. Here again, higher highs. See that? Higher highs. Here there was a higher high, but it left a kind of a, that's a bear candle, suggesting that price could be retracting. What it means there is that the candle would have came all the way down here as a red, and then the bulls have pushed it all the way back up, leaving this long shadow. The long shadow here just suggests that, look, they're running out of steam. They couldn't push it any higher. You can see the candle wasn't a higher high. This one here, something similar. Price came down. The bulls tried to push it up again, but they couldn't even get a bit of a bull run off. There's no red, blue there whatsoever. So naturally what happens? Comes down. And as well as coming down, passes through the 8 and comes all the way down here. So you can see here, lower lows. There wasn't a lower low there. I wouldn't have traded that day. A lower low. As soon as I see the candle becoming lower than the closing price the previous day, or certainly the shadow, I'm going to feel confident it's going to go down lower. So like this one here, it was below the 200 moving average. Because it was below, I would have been comfortable putting another trade in there as a low. So last week, I would have looked at that on the 4-hour chart and thought, well, that's closed below the 200. I would have looked at other charts. So to give you an example, yet again, risk assessment. Don't just look at one chart. So risk assessment, I'll get rid of some of these. I would have been looking to see, right, it's closed below the 200 here. So let's forget about these candles. These don't exist. We've woke up in the morning, or we've watched this session, and it's closed here. Let's just stick another trend line. I would have been looking to say, okay, it's closed there. I'll make that one. What color should I make that one? Like a violet. I'll make it a violet. So what I'll be looking, well, where's that on a 12-hour chart? So here, It closed below the 20, headed back up again, rejected. It would have been heading down. That would have given me confidence it was going to the 50. So that would have given me, as a risk assessment, confidence that, well, look, you know, it's a lower low. It's actually gone lower. You can see the violet line there is lower than the previous. So that would have given me an indication it's going to go down further and probably head to this 100. How many pips would that have been if I decided to trade there? 39 pips. Not a lot, but it all counts. It all adds up. So I would have probably looked at the 4-hour chart. I'd have seen this candle close here, which was a lower low. Then I would have been assessing, well, where's price heading to? 12-hour chart, probably heading to the 100. There's 40 pips in that. Yeah, I would have probably placed a short there. On the daily chart, there's no real risk at all. If you look, it's still a lower low. You could have even went to the 50 here, but I wouldn't have. I would have probably taken the 12-hour. You can see it did close a little bit below the 12-hour, then it stopped. But I would have been safe, and I would have taken the shorter trade, the shorter short, as you could say. So now again, lower low. I'm expecting the price to come down a little bit further and hit this trend line. So I know that was a long recap. Just look for the lower lows, the higher highs, and check it on the daily chart. Every morning, check the daily chart. What's the higher highs and the lower lows? At the end of the week on a Friday, then check it on the weekly chart, because you're seeing how the week has ended. At the end of a month, you're checking on the monthly chart. So on this one here, there's no higher highs on the wave. You can see there's no higher highs. Struggled on the 50. So it may come down again, bounce off the 8, and then decide to go back up and create a higher high. Or it may try to come back down here again. So we've got a long time to go for the monthly, the weekly. Let's see if it becomes a lower low here. So I'll just put the crossbar on. Let's see if it becomes a lower low than this point here. If it becomes a lower low than the 50, then yeah, it's traveling down a bit further. Price is going down, and the bears are certainly in control. Then on the daily chart, yes, looking for the lower lows. And if that closes about here, I may wait another day to think, okay, is it going to close below that trend line? And if it closes below, then I would go back in again on another short, which would take it to the 200, 172 pips. So I hope that is useful. If I think of anything else, I'll add more in. If I see anything more going on today, I'll do another video. So as we closed yesterday, GBP, JPY, is it going to head down to either this trend line here or the 50? Let's see. Keep an eye on the daily chart and the weekly chart. So have a good day. Catch you later. Anything at all, please do not hesitate to send a message. And I look forward to catching you later. Bye for now.